With me today, I have one of our own Forbes 30 Under 30 winners, Maneet Ahuja. Maneet is the author of a new book called The Alpha Masters. You might be able to guess that the book is about the secretive world of hedge funds. Maneet, you go a step beyond that. You give us profiles of some of the most powerful and successful names in the hedge fund industry, from John Paulson, Ray Dalio, Dan Loeb, David Tepper. Maneet, before we get into those big alpha masters, tell us A, why you wrote this book, and B, why the hedge fund industry is traditionally more secretive.
I decided to write this book after I was approached by McGraw-Hill. I'd been working with and reporting on hedge fund managers for CNBC for the past 2 to 3 years, and had assisted with and worked on some really big stories, from reporting on the Lehman Brothers fallout with David Einhorn, to John Paulson and the Goldman Nabokov deal, to David Tepper's first ever appearance on CNBC, which sparked a 2-week rally in the markets called the Tepper Rally. As I got to know these managers and they became more comfortable with me, I just became more and more fascinated with their stories and how they built these huge businesses that move the markets, kind of like an invisible hand, if you will, into many of the biggest deals taking place.
Your book is it's a list of all-star power players. One of the chapters is about John Paulson, who was relatively unknown before he made the so-called greatest trade, or one of the greatest trades in history, by betting against the housing market right before the crash. He netted $15 billion that year for his firm. But in this chapter, he talks to you about the early stage of it launching his fund, where he talks about it was difficult for him to even raise $1. Can you tell us the anecdote he shared with you about sending out those business cards and who you heard back from?
It took him a whole 2 years before he got one investor. He had been very successful at Bear Stearns and at the M&A shop that he had worked at beforehand, and he thought that, he was a smart guy, why shouldn't he be successful? And he had a good Rolodex of contacts, so we sent out 500 announcement cards in 1994 announcing the formation of Paulson Partners, and he only got one back. The phone didn't ring, he didn't have an assistant. The only card that he got back was from his former boss, Ace Greenberg, saying good luck. Consistently, all the managers have shared their stories of starting their fund, and it takes a track record. Investors want to see a track record before they're going to trust you with their money.
Activist investors have been in the news lately, and you have some of the big ones that have been around in the news lately. 3 of them actually stand out. Dan Loeb, obviously from Third Point, who won his battle with Yahoo by ousting CEO Scott Thompson. We have Bill Ackman with his proxy fight in Canada. And then a little bit before that, we had Paulson and his kind of urging the Hartford to split up and focus more on property and casualty. Is this something we're going to see more from hedge fund managers, taking a louder, more active role, or is this kind of a one-off coincidence because it's kind of happening at the same time?
As a journalist, I'm not sure if I'm qualified to pontificate if this is a trend or it's just a confluence of events, but if I had to take an educated guess, I would say that the success that these recent activist investors have had would hopefully mean that corporate America is going to take investors more seriously, especially in times where we're under financial pressure. The country's facing a lot of debt. The fears in Europe are still a huge overhang in the markets. We can't afford as a nation to be operating companies not as efficiently as possible. So I think if an investor steps in who's well positioned and well researched and has a good plan for how to fix a company, I think that at least it seems that investors are listening and standing behind them with that.
All of your alpha masters reach their success, different paths, different investments, different strategies, different failures at times, but was there a commonality among them that you noticed?
Yeah, I think it was really interesting. I actually didn't notice until recently that every single manager in the book was self-made and pulled up their bootstraps from meager beginnings. They all were relentless, just working around the clock to achieve their goals. I mean, Ray Dalio started caddying at a golf club when he was 12 years old. Boaz Weinstein started interning at Goldman Sachs. He had been begging for an internship at Goldman Sachs, and he started there when he was 18, right out of school. They very quickly decided that they were going to be very aggressive. David Tepper worked his way through school and came from a very poor background. They got scholarships. They did whatever they had to do to get to where they wanted to be.
So a lot of drive between the alpha masters there. What do you think retail investors can learn from this book?
There's so many different parts that retail investors can learn from Bill Ackman, just cold calling around Wall Street from a Rockefeller Center deal, to John Paulson doing a variety of different menial tasks just to get in front of investors. There are a bunch of different things. One would be not being afraid to take calculated risks.
Right.
Whether you're a retail investor or you're a billionaire investor, you can look at your portfolio and if you have confidence in your analysis, you can make those bets. Right. Number two, I think that having a macro outlook on the world has become increasingly important. Speaking to a lot of different hedge fund managers, they said you used to just be able to be a value investor.
Right.
It's not really possible to be a value investor today. Even as a retail investor, you have to take into account world events and how interconnected we are, and that was a lesson many people learned through the recent financial crisis.